lots of contending themes at the moment. Obviously, geopol remains one of them. The energy surge, commodities remains another. Do you think when we see the big kind of moves, which is a weakness in the yen, king dollar, the upside in commodities-related currencies, are these themes that will continue to be traded over the next few months?
It looks that way, although when it does come to the big US dollar, if you X out one or two of the specifics, the dollar, I think one of the interesting features of the current landscape is that the dollar, is not actually on a strongly appreciating trend. And I think one of the observations that we're making is that certainly going back to the early 90s, the US dollar has tended to peak around the time of the initiation of Fed tightening cycles. And so to some extent that is already happening. Commodity currencies, I think, are going to continue to draw support from the ongoing strengthening or persistence of strength in commodity prices, but there is a limit to how much that could continue insofar as if we do see rising expectations that this may all end in some form of global recession, then that is not a good news story for commodity currencies. But for the time being, I think the tailwinds will continue to blow. And similarly, dollar yen is obviously, and Aussie yen have been getting significant uplift. Obviously, the rise in US Treasury yields is the sort of proximate cause of that. But again, if you look at the interest rate complexion, or if you look at the whole curvature of the US rate structure and how that relates to the yen, we do think these levels above 120, even though they may extend in the short term, may prove to be on borrowed time. So we're not rushing to chase this weakening in the yen, even though momentum, does favour some further weakness in the very near term. Yeah,
and on that weakness, we're getting the minutes of the January policy meeting from the BOJ saying that they won't hesitate to add easing if necessary, saying that further coordination with the government is needed. And the addition of easing is really an interesting one, because there's been lots of talk, we're finally getting some reflationary push, albeit it is from these really super high levels that we're seeing in energy prices. Do we see a level where the BOJ and authorities are uncomfortable when it comes to the yen, albeit that they might be giving a bit of a lift to exporters?
I actually think they're probably getting uncomfortable at these current levels, but there's not much they can realistically do about it. I think although we're getting some inflation, as you say, coming through from energy prices, this is not good inflation. This is very much cost-push inflation. The kind of inflation that Japan wants to see, is driven by strengthening in wages. So at the moment, all this is doing is adding to sort of household, burdens as far as high input prices are concerned. So, and the weakening yen is obviously aggravating that trend. So I actually think this is not a welcome development. But the problem that the BOJ will have now is if they try to do something about it, say they lifted the tolerance band around their 0% YCC target, it would be perceived as backing away from easy policy at the time when the economy is clearly still in a weakening phase. So I think for the time being, they're just going to have to sort of suck it up and tolerate this. But I think there is a limit to how much before we start to see some jawboning coming perhaps from MOF as well as BOJ.
So Ray, how about the yuan? A lot of people think it's going to have to weaken to boost the economy. If it weakens too much, it's going to cause financial instability. What do you see there?
Well, we do think that the PBOC does seem to have kind of called time on the ongoing strengthening of the yuan, particularly in kind of basket or trade-weighted terms. And in order to arrest that strength, there has to be an engineering or a tolerance of stronger dollar-yuan levels. We have forecasts for that rate rising up towards 650 later in the year, and the risk is that it could arrive sooner rather than later. But they've clearly protested via various fixings recently that they're unhappy with the moves. And we will see some more monetary policy easing coming through sooner rather than later. So, but for the time being, at least, the underlying trade forces supporting the yuan are still there. So I think it's going to be a slow grind higher from
Ray,
here.
very quickly, what's your target for AUD? 75 cents now looking a bit overdone?
Well, our long-standing forecasts for Aussie have been for it to spend most of the first half of this year in a 70 to 75 cent range. We spent a little bit of time below 70. Obviously, we've spent a little bit of time now above 75. So again, momentum is there. Commodity prices are trumping all other influences on the currency. But I do think that probably this current spell above 75 won't last for too long.